Hey Puppy Trades! I wanted to do a video analysis update on the two ETFs from YieldMax that have clearly better competitors, and both of the ETFs, at least one of them, has a lower expense ratio. So that's what we're going to do in this video. We're going to prove YieldMax has two ETFs that have objectively better competitors. And then what we're going to do later in this video, we're going to discuss the idea that one day I might start a company that does things like pair trades using this knowledge. Another thing we'll consider is before I have access to large shorting margins and stuff like that, collateral through a company. We'll discuss if it's possible to do this with put options on TSLY and YBIT to make delta neutral positions, and then of course we can discuss the possibility of back testing that. So a lot of fun. So of course, let's just start TSLY for Tesla and YBIT, YBIT for Bitcoin. They're just not up to snuff. And I say this as someone who owns both of them. I own all four of the ETFs in this video, and I've stopped taking positions in them, or I've continued taking positions in them based on the knowledge in this video. So as always, this isn't investment advice. This is just documenting data, and it's for entertainment purposes only. Besides that, so we look at TSLY. What's going on here? They're paying pretty nice dividends. I mean, it's hard to believe that, you know, it's had one reverse split. But depending on when it was bought, if it was timed, it's been a winner. Maybe it hasn't been a winner, but the most important test is the blind average test since inception. We do that in TSLY, 9% total return annualized, and that's with a very high dividend, and that is competing with the S&P 500's average return. At face value, it's not very bad. It really isn't, and it's a positive return totally from a very large yield, and Tesla isn't going anywhere. And if we look at, you know, since TSLY's inception, by the way, I took a lump sum position in TSLY right here, and I've just collected dividends, and I've used those dividends to either pay bills or buy other things. We can see TSLY hasn't been, Tesla hasn't been in the best super Tesla bull market. So that's really the one caveat, is if we're objectively zooming out for Tesla and Bitcoin, you could make the argument, well, Tesla and Bitcoin, YBIT, they're using different options. If we do see a violent rally to the upside for Tesla or Bitcoin, then maybe the dynamics will change, and we haven't really seen this violent Tesla Bitcoin rally that we know these stocks are capable of. So let's just get into the proof that Tesla has a much better competitor. The blind average test for TSLP from Curve, which because of a fee waiver, the expense ratio is 1.25, but there's a fee waiver, so the expense ratio is only 0.99. Now, without that fee waiver, it's more expensive than TSLY. So understanding when that fee waiver is going to be gone with is very important. So that's something that I'll be monitoring. TSLP blindly averaged into a 49.38% annualized total return basically for a year. Happy birthday. This is basically back testing TSLP's 1 year birthday. So we look at Tesla for the past year, it really hasn't been up too much. So if someone bought Tesla, they bought it at 218, now it's at 249. They got no dividends. TSLP, 25% dividend and a 49% annualized total return. here's just the proof right now. It does better than TSLY by a lot. By a lot. Almost 3.5 times better performance, 49 versus 13% annualized return. So TSLY, X. It has a better competitor. TSLP, smart, is always going to say total returns better than chasing that yield. Now, what's the good part? The good part is TSLP is so good. TSLP is so good, it can actually be paired with a YieldMax ETF that shorts Tesla called CRSH. And these ETFs can be paired together. If CRSH and TSLP are paired together, the average dividend yield is roughly 45% last I checked. And we see last back tested in a recent video a 10% annualized return with a 45% yield that is delta neutral. So that's Tesla. For YBit, this is their Bitcoin covered call ETF, and it is not competing with this Curve ETF. It is competing with this ETF from Roundhill. So sorry, it wasn't ProShares, it was Roundhill YBTC, which now has another ETF that does a very similar thing on Ethereum. I just made a video about called YETH. I'll refer to that as YETH. So what all these ETFs are doing is they're buying, besides the short ETF I went over, they're buying at the money call. That gets a delta of 50. Then they sell an at the money put. Negative plus negative is a positive, another 50 delta. So they use 50 plus 50 is 100. 100 delta is the equivalent of owning 100 shares of stock. That means they can sell what? An out of the money covered call. So that's how they get their exposure. That's why these are called synthetic covered calls instead of just regular covered calls, because they get their exposure through options, saving them tons of money, as I went over in my video on XDTE. Check that out, another Roundhill stock. So we look at Bitcoin. A very similar argument could be made for the so-called devil's advocate that since YBTC and YBit's inception, Bitcoin hasn't been in a bull market. So if YieldMax is using, or not in a bull market that we know Bitcoin is capable of, where the implied volatility really expands, and we see implied volatility go very high, but with the stock going up. That's what Bitcoin and Tesla are capable of doing. That's why NVIDIA's yields were getting up to the hundreds, even though the implied volatility wasn't 100. That was the call skew. So that would be the devil's advocate, that if we see things get violent to the upside, YBit and TSLY, their methods might be better, but at the same time, who's to say TSLP and YBTC aren't going to be able to take advantage of that too? So they are using slightly different strategies. If you like this video does well. We get 20 likes on this video. I'll go into the Greeks. Really, seriously, if this video gets 20 likes, I'll go make a video deep diving into the Greeks, explaining the difference. Okay? If not, I won't. So that's the devil's advocate, that Bitcoin and Tesla, they haven't been in those rallies we know they're capable of, right? And so we look at Bitcoin, and we can just very quickly do the exact same thing just to save time. YBit, blindly averaged into, we're going to see a negative return versus YBTC, negative 6.86%. YBTC, sorry. Let me make sure we get the exact same dates. YBit, since inception, my bad. Negative 18.56% since inception, right? So YBit loses a substantial amount of money. Negative 18%. YBTC makes money. It makes 5%. So it's way better than YBit. It's way better than YBit, okay? So that's really it right now. I've basically proven in this video TSLY and YBit have much better competitors from Roundhill, not ProShares, and Curve for the same or lower expense ratio, right? So now the last question is, we have the Federal Reserve. They're forecasting that yields are going to fall. That yields are going to fall into. We look at the dot plot. Yeah, I should have gotten this dot plot up in better. But we look at the Federal Reserve, and what could happen is that basically the Federal Reserve is expected to have to lower interest rates. That's, oh, here it is, the dot plot. Right, here it is. So we don't need my conjecture. We can see exactly what the Federal Reserve is expecting for interest rates, that we're going to see them fall to 3% in 2026. Now, what that could mean is that borrowing fees get a lot cheaper. I could start a company, and then this company could potentially run pair trades and scale this advantage. I could keep looking into this difference. These types of differences are very important to understand. Basically, every bit of knowledge, literally every bit of knowledge someone has about the stock market can make money. And I even think this when like some mom tells me about like they're buying food for their kid, their baby. I'm thinking like, you know, something special about the baby formula market or the child healthcare market that you can make money on in the stock market if you knew how. Like, I literally think that. But anyway, all knowledge in the market is useful. So what I'm going to do is I'm going to keep looking into the correlation of YBITs and YBTC and the correlation of TSLY and TSLP. If it continues, the YieldMax ETFs, for those two, are significantly worse, I'm going to consider a pair trade where half the pair is short TSLY and YBIT, the other half is long TSLP and YBTC. That sounds like a lot of money to me, regardless of what Bitcoin or Tesla do.